So we can
Tim,
we can loop back to the question. Yeah.
You were talking about your only C in college was in a computer science class.
Well, actually, Santa Clara University isn't that well known, but it was actually California's first college back in like 78 or something. But it's a Jesuit college, and therefore their focus tends to be on philosophy and religion, which actually is where I really thrived. My degree was in marketing, which I kind of regret. I personally am of the philosophy now that college should be used to learn how to think and not to learn anything vocational. Yeah. So I consider that sort of an error. In my teen years and college years, I was a writer. I was a computer guy, and in college, I sort of discovered trading.
Did you take a lot of philosophy classes? A lot of thought classes?
Yeah, I did. I really liked philosophy, history, religion, all the, as they say, fuzzy topics.
Esoterics, yeah. And what, without getting personal, what kind of philosophers do you favor?
Mm-hmm. Well, someone would assume people like Schopenhauer. I would think for someone bearish as me, but I don't have any particular favorites. I like to think about ethics, and it all blends into like kind of politics and sociology and religion. It's all basically like, what are our lives made of and what should be important in our lives. So I like to think, and philosophy is all about thinking.
So how did you start carrying over that thinking into your perception of markets?
Mm-hmm.
You said in college you started looking at markets. I'm assuming mid 90s, somewhere in there.
I'm a little older than that. I was in college in the late 80s, actually mid to late 80s.
Right.
And
you and I've related the same age. Yeah.
Oh, okay. So I've related a story that when I was a boy growing up in Louisiana, I would get kind of enthralled by it rains there a lot, and so I would watch the raindrops flying by on the side windshield and bobbing up and down. I was sort of mesmerized by their motion. And you may see behind me, I've got a bunch of very old maps, these like 400-year-old maps around me. Okay. I'm sort of a cartophile, if there's such a thing. So maps have also had an interest for me. So there's this weird fixation on the visual.
The visual.
And I guess I've always been drawn to charts in that respect. There's an unfortunate circumstance with what I am and when I was born was that I'm pretty open with the fact that I got a lot of bearish blood running through me. And let's face it, when I began trading in 1987, that was probably one of the great times in human history to be an unabashed bull, which I was not. Right. And so, in any case, I
remember the same thing. It's I remember my junior year in 1987. Watching whatever financial TV was then, I can't even remember. Maybe it was just CBS News with Mike Wallace or something, and talking about the whole collapse of and it was Bear Stearns back then that kind of started the whole thing, as I recall. With the junk bonds and all that. So, 1987, and as a econ history major myself, it did predicate. And growing up in Detroit also in the 70s. Puts and I always and that's where I always come back to where do you get your slant as a trader? I mean, do you think it might have been different? But it's interesting because you were still in as a teenager in college in Silicon Valley, where all these great companies and things were going on, and you were doing things. So where do you think you get this bias?
Well, it's an interesting question. I've thought about it a lot because it certainly has cost me a lot of opportunities over the years. On the one hand, I've been an ardent fan of capitalism. You and I both grew up during the Cold War and when the wall came down and all that. And I've always believed, and I spoke earlier about my love for freedom, that a business which creates employment, creates fine products, creates profits, when everyone wins, the shareholders, the employees, the customers, it's a beautiful thing. I mean, this is an expression of human creativity that I think should be rewarded. So when I look at companies like Google and Apple that make superb products, I say more power to them. I mean, the fact that they are worth so much, have made so many people millionaires and billionaires, and have so many millions, hundreds of millions of happy customers around the world, that is a wonderful expression of human freedom and potential.
Yeah.
Now, one would assume that someone of that bent would just buy stocks all the time. My stock analysis is far afield from my own sort of political philosophy because I tend to think a little too much, and I don't know, maybe I've got a pessimistic streak or something like that, but it has its place. I mean, I have children. I'm one of those guys who, when he walks in a room, can identify in half a second the 4 danger zones. I mean, I know exactly where the risks are and what needs to be dealt with to make it safe for my children. And so with stocks, I'm sort of the same, or markets in general, the same stripe. And so, I don't know, it's not like an anvil hit me on the head when I was 10 and I've never been the same. I mean, it's just my personality that I've always really preferred the short side of the markets for a number of reasons.
Do you think it's because, and I have also, I've made most of my better trades have been on the short side. However, I've also taken, taking pain for long periods of time by having that bent. And I guess I've learned over time to trade both sides pretty equally, but I'm more scared of being long than I am of being short, which is strange.
Yeah. Well, we're living through that right now. I mean, take gold for example. I mean, you look at gold.
But you think 1193 is inflated, Tim?
Well, it's funny because I did a chart a week or two ago and put it on the blog showing that, if the percentage move of gold now is similar to what we had in the late 70s, we're headed to $2,500 an ounce.
Yeah.
Now, this is the bullish-bearish thing. As a chartist, I can make that conjecture, and I can rationally say there is a plausible move to 2,500.
Right.
As a trader, I'm a lot more nervous about chasing something which has gone up so far already in the hope that it might double yet again, and that's a problem. Here's kind of how I would explain my comfort with bearish trades versus bullish ones. The beauty of being a chartist and a bearish trader is that you already sort of have all the answers in front of you. You look at a chart that's topping, and you can see very easily, A, where you're wrong, and B, when it probably makes sense to get out. Let's take a completely simple example. I mean, if a stock is traded for years at $5 and shot up to 100 in the span of a year and started falling, you can be pretty assured that as it approaches 5, that's probably a very good support zone. On the other hand, if it's been trading at 5 and it breaks out and you buy it, you don't know if it's going to 6 or 10 or 100 or 1,000. You have no idea.
Right.
And so with a bearish disposition in charts, it's sort of like getting the answer sheet from the teacher in elementary school. You've got all the answers in front of you. That's one reason I take a certain comfort of that. The mathematics, unfortunately, that work against that is that the guy who bought at 5 and sold at 100 is always going to make more than the guy who shorted at 100 and covered at 5. It's just simple arithmetic.
Right. However, do you think in your mind it's easier? I don't know. I think stocks fall harder than they go up generally.
And faster, yeah.
And faster. And I think, you get parabolic moves at, points where, as I tell people, I love seeing stocks that just go from, as you said, 20 to 100 in 2 or 3 weeks' time, whatever it may be. Unless there is a volume assurance that volume is going to continue to double, that stock just can't fundamentally keep doubling and tripling and quadrupling. So I think it's also, it is that house of cards that ultimately, there's a reason why it gets up hard so fast because everybody's just chasing it.
Yeah.
On that premise that once it's over 5, who knows how high it can go. But then it also becomes a game of musical chairs, and I don't want to be the last one in. So when you and your buddy start selling, then everybody sells, and it falls fast and ugly.
Yeah, the fact is that as traders, I don't think there are many jobs where you can get as close to living history as this one, because we're living in extraordinary times. If you look at the debt, if you look at precious metals, if you look at the dollar, if you look at China's emergence, 100 years from now, people will be talking about November 2009 and the dates surrounding it. These are extraordinary times. And tick by tick, we're sort of seeing history unfold before us.
Yeah.
And so that's, as a student of history, and that's another draw for me in this whole thing.
Yeah, and again, you, as a student of history and a student of cycles, you believe that things have their time and their course, if you will, and run that course over that time. Predicting that is a somewhat difficult thing. Would you consider the way that you trade predictive or reactive?
I would consider it, well, it's safer to be reactive. I lean toward the predictive side. By way of example, so there's like 900, let's call it 1,000, it's closer to 1,000 charts that I look at when I have the time, about once a week. And as we sit here now, as I go through these 1,000, I mean, if you look at my book, it's not all bearish charts. There are plenty of charts I've got there that have multi-hundred, multi-thousand% gains. So it's evident to me what makes a chart a bullish chart. And I've tried like crazy to find as many bullish opportunities as I can, except for those hyperbolic items like gold, because I just can't do it. And the fact is that I'm finding not several, not dozens, but hundreds of charts amongst those 1,000 that look like dynamite bearish opportunities. Now, it seems paradoxical because we're basically making new highs, not lifetime highs, but at certainly 52-week highs on all the big indices. And it's not like there's some fundamental breakdown going on. But the preponderance of stocks, preponderance being 100%, of the opportunities I see are all on the bear side. And it tells me, irrespective of what the Dow 30 did today, that we are setting ourselves up for something really sensational. And, you and I probably read a lot of the same stuff in terms of kind of the emperor has no clothes, that we cannot print ourselves into prosperity. And there will come a time when the gig is up. When that time comes, it's going to happen very swiftly. If one weekend China comes out and says, look, we're doing the following radical things, we are decoupling our currency from the U.S. dollar, what have you, or we're not going to buy any more debt from the U.S., and they recognize, gee, it'll be somewhat bad for us, China, but we are going to rule the world after this blows over, the Dow's going to fall 1,000 points Monday morning. It's not going to inch down 10 points for months. It's going to be, there's a cataclysmic possibility, and it's just a matter of being prepared for that, I think.
But you're not, I don't view the way that you look at the world in charts, Tim, and I just can't operate this way myself either. I'm bearish, but I don't have an end of the world trade on, because if the end of the world comes, I'm not getting paid anyways, and all that matters is I have water and ammunition, and the rest is anyway. So,
well, just let me clarify something. In spite of what I just said, I actually don't believe in the end of the world trade either. And I've been very vocal on this on the blog. There's a link on the blog called The Big Picture, which, not to be confused with Barry Ritzold's blog, but it's a link on my site where I sort of say what I think the next few years holds. I'm not setting myself up for that 1,000-point drop. I merely mentioned that as a remote possibility that calamity strikes much more. You're not going to see a 1,000-point update because of some wonderful news. My belief is that the market we're going to be facing will be a slow, multi-year, grinded-out sort of thing. The bears had their fireworks in 2008. The bulls had their fireworks in 2009. And I think both of them are going to be really frustrated over the next few years.
Yeah, I agree. I think it's going to become, trading as an asset is going to become very important for the individual investor. Buy and hold is dead. Sell and hold is dead. I think that you're going to have to really wisen and sharpen your skills to maneuver through. Again, it could be 10, 20 years of just kind of, in this nasty little wave, just like we saw, after the 29 explosion. I think we will get to that point where, we may not test lows, who knows, but where do you think, again, so, as a trader myself, I'm kind of looking at the black swan trades where I'll buy out of the money puts right now. I'm not going to spend big money. Volatility's cheap. It doesn't cost me much to place a bet on a stock being down 10 to 50%. or an index. I can make those bets for every Monday morning type scenario, and it's cheap, and I'm comfortable doing that. In the meantime, I think you've really got to look at charts and say, I got to containerize my time frames, trade less but more, more often. I guess. I'm not a day trader by any means. I like to get those 2 to 3 week moves, and I think we're going to start seeing those pick up. Maybe end of first, second quarter of 2010 also.
Mm-hmm. Yeah, I've really reduced my risk substantially. I'm actually not trading options or E-minis anymore. It's strictly equities and ETFs, and they tend to be spread out among literally hundreds of different tiny positions. I'm kind of the Will Rogers of bears. I've never met a chart I didn't like to short, and so
I see the same thing.
Yeah. And my ideal market is one where my only job is to keep ratcheting stops down as the market moves my way. Today, and I know this will be shown later, but today being November 25, it is the kind of data that I like to see, which is gold was on fire, the U.S. dollar was getting crushed, but the small caps still found a way to inch down, and incredibly, the ultra short SKF, which is by far my largest holding, went up.
Yeah.
I mean, that to me is very exciting. If the SKF can go up 0.4% today in the face of a lot of very strong up action, well, good heavens, what's it going to do when the Dow actually falls?
There's a lot of divergences in the market, Tim. You've got, again, Russell's 5-6% below its high. It hasn't even neared its new, high for the year. ES is sitting at the high. YM sitting at the high again. Not a big deal. Yeah. But again, you have gold running through the moon, and I think that is the Momo parabolic trade right now, and it's just being squeezed to the bejeez. And I mean, we're a solid 10% over a 40-period average. I think gold, short gold, long dollar right now is the hardest trade to put on.
Oh yeah.
But over the next 3 months is going to pay the biggest right now. So
well, it's funny. There's a blogger you may know by the name of Gary Savage, who runs the Smart Money Tracker. And he and I usually disagree on just about anything, but we like each other because it's always been a very respectful relationship, and we learn from each other. And he's been a big, like gold bull deluxe. And even a week ago, he was like, all right, it's time to take profits off the table, and let's wait a few months here and get back in shape. So even he, who's a big time bull in precious metals, has been backing off. And so even the mega bulls who have taken money off the table, I'm sure, are flabbergasted that this just isn't stopping.
Well, now I do think this trade fails if we break a new low in the dollar, we'll get below 70. If that does happen, gold's going to 2,500, as you said, and the dollar will drop in an instant to 60. It'll be that same move that you're talking about in stocks, but in dollars, and you'll continue to see this inflationary push. That being said, how do you establish, risk when you look at your portfolio and when you are trading? Do you have a trading portfolio and a long-term portfolio? Do you separate the two? Do you look at things a little differently? How do you manage your risk on a personal portfolio?
I don't have a dichotomy of like long-term holds and short terms. To me, they're all intended to be long-term holds. Naturally, with short trades, you can't expect them to be held for years, or usually even months, because they're not going to go into negative numbers. I mean, they will settle down at some point. The way I manage the risk is on a chart-by-chart basis. Every chart is different. I know to the penny when my thesis about a particular stock is invalidated, and I set the stop there. It usually tends to be well less than 10% loss, usually more like 2, 3, 4% loss. And the amount of the portfolio overall that a single trade represents is absolutely minuscule, like 0.15%. I mean, so if I wake up one morning and Whole Foods has doubled in price, that's not great, but it's not going to have any deleterious effect on me.
Right. So you will. I mean, will you actually hold 100, 200 stocks at a time? I think that's right.
At the moment, at this very second, I've got 233 positions on, and if this darn market would start to crack a bit, I could easily see it going to 300. Some people, all people, are kind of flabbergasted at that because they consider about 10 stocks to be enough. I am really organized and systematic about my trades, and it makes sense to me, and it's feasible for me to manage that much.
How do you organize something that large? Because again, I've run a portfolio, and 20 to 50 is a lot for me. 50.
Yeah. Well, I spend a lot of time on it. I mean, I've got this spreadsheet that I'm very proud of that I kind of manage the risk on and manage my stops. I mean, the most time-consuming aspect of it is just going through, and I don't do it every day, there's no way I could, but going through from time to time, chart by chart by chart, and updating all those stocks. I just let them sit, and if the market does pull back a reasonable amount, a couple of percent, then I figure it's time to go in there and adjust, because I don't want to just let the stops get stale because you put all your profit at risk.
So do you look at your risk reward same, or are you looking for a bigger gain on your reward than your risk typically? Again,
it does. I was actually thinking about that just yesterday in terms of tracking target prices and focusing on the risk reward ratio. I consider target prices less useful and not nearly as feasible to establish as the stock prices. I'd rather the stock go where it may, as opposed to supposing how low it might go. So no, I don't really do risk reward ratios.
But if a stock goes your way 10%, Tim, and you were risking 5, will you start pulling some off, or you add to it? Do you pyramid the position? How will you?
Yeah, it's a very good question. Usually, either one of two things. Usually, I'll either take half off and tighten the stop, or more commonly, I'll just tighten the stop. As you know, as a trader, usually the expense comes from the money left on the table. Yeah. And I've been guilty of that plenty of times. And I'd rather just keep the position on. And being a short, usually they shrink in size as opposed to growing. If it's an ultra fund, I would have a very different disposition because the sheer percentage weight would magnify. Going back to the SKF position, let's say it went up 20% in price. That's great, but I don't want that much money at risk. I'd rather take a chunk of that out.
So you readjust the portfolio, as you said. Obviously, shorts coming into money actually reduces the risk of that specific portfolio. Just so folks understand. And when the long side, like a SKF reverse ETF, ultra ETF goes up, your portfolio is actually, that position is actually growing in size because of the nominal value. So you're always adjusting that, but you try to be pretty consistent then with the size of each position. And do you have a max size that you'll go to? Do you have a max drawdown?
I've got all kinds of nice books about portfolio formulas and management and so on, and it's a little more arbitrary than that. I tend to be very consistent in terms of dollar size. My stock trades tend to be $10,000 or $20,000. ETFs tend to be $100 to $250 to maybe $500,000.
Right.
In some instances, $1 million. Like SKF right now, I've got $1 million of that. That's about. But there's no real science to it. I just try to be consistent about it based on the nature of what I'm doing. So if I am shorting something like Whole Foods or some other just single position, I'm not going to short $500,000 of Whole Foods.
Right.
I'm just not.
And are you? How many times will you go in and out of a short? You short Whole Foods at 20, you're out at 22. You short it at 25, you're out at 27. Yeah. Will you play that game? Or do you back spread? Or, will you sell stock by calls to prevent yourself from getting shaken out of a position? Do you do any of things like that?
No. It's I've got a pretty long memory when it comes to stocks, and I find stocks are a lot like people. They have personalities, and you get along well with some, and you don't get along so well with others. Like take precious metals, for example. I've basically learned to fear them because there have been times that I've made money in the short time with GDX and GLD, but I don't understand why they keep going up, and I'd rather not mess with them.
I'm curious, did you feel the same way about oil in 08?
I actually wasn't really messing around with oil at all, or Dig and Dug and all those other things. There's a funny story behind that because in retrospect, the very top of that market, I went to here in the Bay Area. It's called the Maker Fair, which is for people who like to do it. I mean, it's a cross between the hippie culture and the nerd culture, and it's very popular. And you get people who do everything from like making robots to like running a loom and making fabric. And at this thing, they were selling the peak oil poster. And I bought one there because I thought it was pretty interesting. And in retrospect, if the notion of peak oil was at this weird hippie Maker Faire thing, that's pretty far gone. And that was actually the top of the market. But going back to what I was saying, there's one on the blog we sort of jokingly called the Widowmaker, the ultra short on real estate, SRS, right, which I'm sure you're acquainted with.
Yep.
I've had so much bad luck with SRS. No matter how alluring I think the chart is, it's just like, no. I'm done with you.
I have my stocks, Krispy Kreme being one of them, that I lost $6-7 million shorting 2000 and 2001. And I got out at the absolute top of that move there in June of 01, and then it fell
$57.
And then it fell in half.
Wow.
It's you have to experience that, but let me ask you, what do you learn from those experiences of diligence and persistence? Because I just finished Greg Zuckerman's book, The Greatest Trade Ever. It was a great book. Talking a lot about short sellers, not just Paulson, but talking about the guy out of Southern Cal who was bearish. The doctor who turned into a hedge fund manager, and just the battles they had not only with other investors, but with their own investor base who knew what they were doing. And how do you maintain and stick to your guns in that scenario? And again, managing money is one thing, managing other people's money is another thing.
Yeah.
When you get there, and as you said, I've got a long history. I've studied this a lot. I know what I'm doing. How do you stay the course? How do you continue to stop out? Mm-hmm. And you're going to miss trades, and that's why I call myself miss trade. You're not going to get the move down when it comes on everything.
Mm-hmm.
How do you deal with that as a trader?
Yeah, well, doing the blog is sort of an interesting positive and a negative to it. The positive to it is that it's sort of like the collective mind. You're in a group, and you're leading the group, and you're looked to as some kind of authority. Right. And I assure you that I put more thought into my trades and what I'm talking about than if it were just me alone and nobody knew what I was doing. Because you don't want to look like an idiot. I mean, it's not my bag to look like an idiot. And so I try to say things and do things that are explainable. So the positive is it makes you more thoughtful. The negative is that we're humans and we make mistakes and we're wrong easily as often as we're right. And you do look foolish a lot of the time. And I've learned to temper my sort of banging fist on the table, like the following is definitely going to happen. In fact, today I went to a blog that I like and admire that made, like, this is the top end goal. And I just sort of cringe because, like, there's very little to be gained from that.
Yeah.
Because if you're right, maybe you can point back to it later. But if you're wrong, everyone loves to get the drum out and beat it and draw attention to it. Yeah. And slam you for it.
Yeah, and again, today I was short gold. I was short about 1180. I got stopped out at 1192, and I'll get back in it. But all week I made more than I lost today, so that's the way I look at it. It's like I was shorting it, making money, shorting it, making money. I can't explain the move today, but I'm not going to fight it either. I'll take my losses and via options and back spreading. I can do a lot of creative things, but I think you're absolutely right. Part of the reason why I'm doing this series and talking about and with traders about trading is that we're all, as you said, we're all humans. We all have these emotions, and battling and dealing with that is really what I'm trying to get at. And how do you keep functioning and dealing with those flamers that come onto your blog? You said you mentioned this earlier off camera. You're really good at dealing with that. How do you deal with that? Because
Mm-hmm.
it's kind of hysterical, watching the people come on. Hey, Tim, you're a bozo. You're wrong again. The market's going up.
Mm-hmm.
How does your psyche deal with that?
Yeah.
Athletes have to deal with it all the time. And so what is it in you that makes you, again, persist and go on
Right.
with what you think is right?
Well, it's not because I'm insensitive. I'm actually a little too sensitive. It bothers me when people make sport of something I've said,
Right.
because my intent is always a decent one.
Yeah.
Not trying to trick or fool anybody. There's no ulterior motive to say something I don't believe for money or anything like that. My view of human nature is generally that people are good, and my doing the blog has affirmed that, because doing this for 5 years and 10,000 posts, the vast majority, 99% plus, are thoughtful, honorable, grateful, and kind, and that's sort of how I view what I would expect.
Right.
There's that other fraction 1% that are just jerks, and for some people, I mean, it's very easy to kick somebody when either they're down or when they've said something that didn't pan out. Some people get a charge out of making others look foolish or to point and laugh. The thing that I've done to insulate myself from that is really about culture on the blog. I think people have come to understand over time that that's pointless prodding like that just won't be tolerated. Some blogs simply will ban anyone that isn't supportive.
Yeah.
I'm not into that.
Yeah.
There are some people who are so obnoxious and offensive and won't stop that they get banned because they're jerks. But there are plenty of very consistent folks who come to my blog who very much disagree with what's being said and are bulls to the max and so forth. And I think it harms everyone, including me, to just click block and be done with them. I'd much rather have divergent points of view and a general understanding that this isn't a place where we just are after yes men.
Right.
As far as how I deal with it personally, it does bother me a little bit. I just try not to seek those things out. I know the places where I'm not liked, and I don't make a point of checking them out every day to see what nasty things they're saying about me. It's not going to do me any good.
Yeah, I mean, I think that's always the best way. You go back to basic playground rules that you're taught. Stay away from the bully. They got their own issues. Otherwise, they wouldn't be bullying. So
that's right.
But I'm always curious to ask other writers because hey, I've been doing the same thing 5-6 years, putting myself out there. I wrote with Peter Navarro. I wrote during the at the end of the first downdraft there, 2002 and 3 with him, and then started my hedge fund, and then wrote again when I closed it because for me it's cathartic and it's a release, and it is community. Trading can be very lonely, and how do you deal? And I think I would hope that's, as you said, what you're getting out of that is that community and shared experience, whether agreed or disagreed. We can agree to disagree on things.
Mm-hmm. Well, it's funny because I've always been very comfortable with solitude. I don't mind. I don't get bothered by feeling lonely, nor do I have the blog as a place to feel part of a crowd. The value of that crowd for me is that there isn't any other blog I can think of where that scope of individuals convenes. And so I've never really seriously considered stopping Slope of Hope, but on the rare occasions that I have, it's a big loss for me too, because I wouldn't know where else to go to sort of get the insights that I do from those people there. And, I've worked for years to build a culture there, and so the blog has a momentum of its own, and I get very guilty if tomorrow's Thanksgiving. I assure you that I will be doing at least one post tomorrow. Same for Christmas Day, same for New Year's Eve, and the rest of it. I feel a real sense of obligation to the people there. And I don't know when it'll end, but it's 5 years going now, and I don't see any terminus.
So let me ask you a couple more questions about some of the software you've developed for trading. Profit obviously was a great one. You sold that to Thinkorswim. You're still involved with some of the technical sides of TOS right now that it's...
I started Profit in '92, which was before everything, before even the internet or browsers, as a historical data company, and I built it into a technical analysis website and sold it in January 2005 to Invest Tools, which merged with Thinkorswim, which in turn got bought by Ameritrade. So it's been this whole series of different places where my paycheck comes from. But my sole involvement right now is Profit Charts, which is really my first child. I'm also, at the request of John Wiley, doing a second edition of my Chart Your Way to Profits book, which is
a great book, by the way.
Thank you. It might as well be called How to Use Profit Charts, because it's really, and I've asked Wiley to make clear that Profit Charts is really what this book is all about. So that's my gig with Thinkorswim now. I'm an Ameritrade. I'm the Profit Charts guy.
Yeah. Well, as you can see behind my shoulder here, I have a profit chart there. I love your charts. I love your charts, especially for the longer time frames. I prefer them. One thing I would suggest is let's get some continuous contracts going on some of these futures on the profit side.
Oh, well, we've got them. The symbology is a little weird, and I'm not sure if the entitlement works on that. But yeah, it's very strange. So, like, if you type in like CL1600, CL1600, that should come up with a continuous crude chart. So if you put in the future symbol and of all things 1600,
so I put in ES 1600 and I get the continuous. All right.
Well, on ES I wouldn't bother because you can just use the index. But things like wheat, crude oil, pork bellies, you name it, 1600 will yield a unadjusted continuous, and 1700, and I don't even remember where I came up with these numbers, it was years ago, 1700 will yield a adjusted contract.
Well,
so give it a shot.
I learned something new from you today.
Yeah, give it a try.
That. Thank you.
Yeah.
So what's next? I mean, we're both trading. We're both fighting an interim bull run here that's been powerful. What's next for Tim Knight? What do you have on your plate?
Well, I would say a couple of things primarily. One is, as long as they'll let me, I want to have a hand in Profit Charts and where it goes, because it's a terrific product. I am managing some money professionally now, along with my own, and I want to do I'd like to build a good name for myself in that respect. And at the same time, I'd like to continue to write about God knows what on Slope of Hope. So those three legs all tie together quite nicely, and hopefully will continue to allow me the freedom that I mentioned at the outset. That's so important.
Well, again, I think that that's it's again for me a core philosophy. I think that you find amongst traders. There is a lot of earned liberties by managing risk. By managing risk, reward takes care of itself, I always like to say, and those liberties can come to you. But it's a lofty thing to manage risk when it comes to trading and managing money, as you know. So I appreciate you coming on and talking about your experiences, because a lot of people, I think, learn from this, and it's very beneficial to share and have that community. So thanks again for coming on.
Thank you. It's been a pleasure, and I wish you and all your viewers a good holiday season.
Thanks, Tim.